Hey, folks, buckle up, because today we're diving headfirst into the economic circus that is Washington, D.C. You've got trade truces, tax cuts, and tariffs flying around like confetti at a bad wedding, and guess who's footing the bill? That's right, you, me, and every hard-working American who's just trying to survive this clown show. So, grab your popcorn, because on Boss Economics World, we're about to expose the government's economic mismanagement, satirize the absurdity, and break down why this so-called bright economic future is nothing but a house of cards waiting to collapse. Let's get into it. This week, the financial headlines are buzzing like a beehive on energy drinks. Investors are popping champagne because the US and China have agreed to a 3-month truce in their trade war. US stocks soared over 3%, riding a 22-day surge that's got Wall Street acting like it's 1999. And then, as if that wasn't enough, House Republicans dropped a multi-trillion-dollar tax bill faster than you can say, deficit explosion. This bill is stuffed with Trump-era goodies, permanent tax cuts for corporations, no taxes on tips or overtime, and tax breaks for car buyers and seniors. Sounds like a dream, right? But hold up, folks, let's not get drunk on the Kool-Aid just yet. Because while the stock market is on a sugar high, the real economy is looking more like a diabetic coma. And who's cheerleading this madness? None other than Stephen Moore, the self-proclaimed economic oracle, who's extremely upbeat about America's future. Moore's out here saying, if we can get these trade deals done, if we can get the tax cut done in the next 3 to 6 months, you're going to see the stock market go through the roof. Oh, bless his heart. Here at Boss Economics World, we don't just swallow the hype, we dissect it, roast it, and serve it back to you with a side of reality. So, let's peel back the layers of this economic onion, from the surface-level hype to the deep, systemic rot, and show you why this bright future is nothing but a government-engineered mirage. First up, let's talk about this so-called trade truce with China. Investors are acting like it's the second coming of the Marshall Plan, but let's be real, China conceded nothing of substance. Sure, they've agreed to a 3-month pause on escalating tariffs, but the existing levies are still in place, and the US is still slapping tariffs on Chinese goods at rates we haven't seen since the 1930s. According to Bloomberg, US tariffs are at their highest level in nearly a century, and the uncertainty around what happens in August, when this truce expires, is already spooking markets. And let's not forget the collateral damage. The past 3 months of tariff chaos have already cost American businesses billions. A 2024 report from the U.S. Chamber of Commerce estimated that U.S. tariffs on Chinese goods have increased costs for American consumers by $86 billion annually, with industries like agriculture, manufacturing, and retail taking the biggest hits. Farmers in the Midwest are drowning in unsold soybeans, manufacturers are paying through the nose for imported parts, and consumers? Well, you're just paying more for everything from iPhones to washing machines. But hey, Stephen Moore says it's all good, right? If we can get these trade deals done, oh, come on, Steve. What deals? This isn't a deal, it's a timeout. And while Wall Street is riding the high, Main Street is stuck in the mud, wondering how they're going to afford groceries next month. This is classic government mismanagement: create a problem, slap a band-aid on it, and call it a victory. Meanwhile, the real economic pain is just getting started. Now, let's move on to the next act in this economic circus, the multi-trillion-dollar tax bill. House Republicans are out here acting like Santa Claus, promising no taxes on tips, no taxes on overtime, and tax breaks for car buyers and seniors. Sounds great, right? But here's the catch: this bill is really just a Trojan horse to make permanent the $3.6 trillion in tax cuts from Trump's first term, cuts that overwhelmingly benefited corporations and the ultra-wealthy. Let's break this down with some hard data. According to the Tax Policy Center, the 2017 Tax Cuts and Jobs Act, TCJA, gave 65% of its benefits to the top 20% of income earners, with the top 1% raking in an average tax cut of $50,000 per year. Meanwhile, the bottom 80% of Americans got an average cut of just $800, barely enough to cover a month's rent in most cities. And now, they want to make this permanent. Are you kidding me? But wait, there's more. This new tax bill is projected to add trillions to the national deficit over the next decade. The Congressional Budget Office, CBO, estimates that extending the TCJA alone will increase the deficit by $4.6 trillion by 2034. And that's before you factor in the new populist promises, which are nothing but crumbs compared to the corporate handouts. No taxes on tips? Great, but the average tipped worker makes just $27,000 a year, according to the Bureau of Labor Statistics. Meanwhile, corporations like Amazon and Apple, which already pay effective tax rates in the single digits, are laughing all the way to the bank. And here's the kicker: Stephen Moore, our resident cheerleader, admits that the national debt is a clear and present danger. Oh, really, Steve? Then why are you cheering for a tax bill that's going to blow a hole in the budget bigger than the Grand Canyon? This is the kind of economic mismanagement that makes you wonder if anyone in Washington has ever taken Econ 101. They're handing out tax cuts like candy, but when the bill comes due, it's going to be you and me, ordinary Americans, stuck with the tab. Now, let's talk about the elephant in the room, tariffs. Stephen Moore says he's not happy about the way tariff rates are being imposed and withdrawn willy-nilly, and for once, we agree. Trump's tariff policy is like a drunk guy playing whack-a-mole, smacking industries with tariffs one day, pulling them back the next, and leaving everyone in a state of perpetual uncertainty. Take the steel industry, for example. In 2018, Trump slapped a 25% tariff on imported steel, claiming it would protect American jobs. But a 2023 study by the Federal Reserve found that while the tariffs saved about 8,700 steel jobs, they cost 75,000 jobs in steel-consuming industries like manufacturing and construction, which faced higher costs. And who paid for it all? You did. The Peterson Institute for International Economics estimates that American consumers and businesses have paid over $100 billion in higher costs due to Trump's tariffs. And now, with tariffs still at 1930s levels, the bond market is starting to get jittery. Bloomberg's Josh Wingrove points out that Trump's recent, reciprocal, tariff announcement spooked bond investors, driving up yields on 10-year treasuries. Why? Because tariffs fuel inflation, and inflation forces the Federal Reserve to raise interest rates, which makes borrowing more expensive for everyone. Just look at the data. The Consumer Price Index, CPI, rose by 3.8% in 2024, the highest annual increase since 2008, and tariffs were a major driver. But hey, Stephen Moore says the stock market is going to go through the roof, so who cares, right? Wrong. The stock market isn't the economy, folks. While Wall Street is riding high on tax cuts and trade truce hype, the real economy is showing cracks. Small businesses are struggling to absorb higher costs, consumer debt is at an all-time high of $17.5 trillion, according to the Federal Reserve Bank of New York, and wage growth is stagnating, with real wages, adjusted for inflation, declining by 1.2% in 2024, per the Bureau of Labor Statistics. Now, let's zoom out and look at the big picture. What we're witnessing here is a masterclass in government mismanagement. The U.S. government is playing a dangerous game of economic roulette, betting on short-term stock market gains while ignoring the long-term consequences. Trade truces that solve nothing, tax cuts that balloon the deficit, and tariffs that hurt more than they help. This is a recipe for a serious economic recession, and the warning signs are already flashing red. Just look at the latest data. The U.S. national debt is now over $35 trillion, or 125% of GDP, the highest level since World War II, according to the U.S. Treasury Department. The CBO projects that interest payments on the debt will surpass defense spending by 2027, eating up 20% of the federal budget. And what's the government's response? More tax cuts, more deficit spending, and more economic gimmicks. Meanwhile, the global economy is teetering on the edge. The International Monetary Fund, IMF, downgraded its 2025 global growth forecast to 3.1%, citing trade tensions and geopolitical uncertainty as major risks. And here in the US, the Conference Board's leading economic index, a key predictor of recessions, has been declining for 18 consecutive months as of April 2025. But hey, Stephen Moore is bullish on America, so I guess we should all just relax, right? Wrong. This is the kind of blind optimism that got us into the 2008 financial crisis, when policymakers ignored the housing bubble and told us everything was fine. Here at Boss Economics World, we're not afraid to call it like it is. The government is driving the economy off a cliff, and unless we change course, we're headed for a recession that'll make 2008 look like a picnic. Folks, here's the bottom line, this bright economic future is nothing but a government-engineered mirage, propped up by stock market hype, deficit spending, and economic gimmicks. The trade truce with China is a band-aid on a bullet wound, the tax cuts are a giveaway to the rich, and the tariffs are a sledgehammer to the real economy. And who's paying the price? You are, ordinary Americans who are just trying to make ends meet while Washington plays economic roulette with your future. It's time to stop the clown show, folks. We need real economic policies that prioritize Main Street over Wall Street, that tackle the national debt without screwing over the middle class, and that promote fair trade without starting a global tariff war. But as long as the government keeps mismanaging the economy like a bunch of drunk clowns, we're all just one bad trade deal or tax cut away from economic disaster. So, what do you think, folks? Are you buying Stephen Moore's bullish hype, or do you see through the smoke and mirrors? Drop your thoughts in the comments below, and don't forget to like, subscribe, and hit that notification bell, because here at Boss Economics World, we're always calling out the economic clowns running the show. Until next time, stay sharp, stay skeptical, and keep fighting the good fight.